As a trader, if you're not careful, the market will always take back the profits that you made anytime we have such kind of price action. I want you to look at this kind of price action and compare it to this here, compared to this move here, compared to this move here. So these are expansion moves, and these expansion moves actually will give you high probability setup with very, very good risk reward ratio compared to anytime we have such consolidation. I call this noise in the market. So if you want to learn how I'm able to approach these markets, how I do my analysis every day, and how I approach anytime we have such kind of choppy price action, you can join my trading community where we do analysis of the live market every single day, and we also review these markets. I'll leave a link in the description box below. So we're going to start our weekly analysis with the dollar index, and we'll start with the weekly time frame. Now, if you look at the weekly time frame, of course, you can clearly see we've had all this bullish momentum. You can see price swept all these lows. We made a high, retracement, and then we've made a new higher high. So at this point on the weekly time frame, we can say the market has done what? We have created a new BOS, so which means the market has created a new dealing range. And anytime we have a new dealing range created, most of the time you anticipate or you want to see the market actually give you a retracement to a discount of this range before we continue with the bullish momentum. And if you look at this move here, you can clearly see previously the moment this market made this new higher high, right? Can you see this leg? Can you see we had a retracement to the discount of this dealing range before finally the market doing what? Giving us this new higher high. Now, the scenarios or the probability I see playing out in this market is either the market is going to give us a retracement to a discount of this dealing range. You can see we have a weekly order block here, and we also have a monthly order block before we continue with the bullish momentum. That's one. Or the market actually fails to give us a retracement right now to the discount of this range, and we just end up extending the dealing range, because that happens again. Immediately you get BOS, it's not a must the market is going to give you the retracement immediately. You can still have the market actually extend this range before we get that retracement. So if you're not going to get that deeper retracement that you want to see, then of course you expect that this weekly fair value gap here will be used as support to give us that bullish momentum. So let's look at the daily time frame. Of course, you can see clearly on the daily time frame we have a new dealing range created by price. Clearly, we've had a retracement to 50% of this range. So if we fail to get a retracement to 50% of the weekly range, then I anticipate that this daily range will be used to give us the bullish momentum. And you can see we have a fair value gap here. And of course, we had this fair value gap below right here where we have the weekly order block. So if we were to get a deeper retracement of the weekly to a weekly range, then of course, price is likely to tag this daily fair value gap. However, if we don't get that, then you expect that these will act as support for price. Now, where price is at the moment on the daily time frame, you can see we had this bearish momentum, a retracement, and a new lower low. So in the process of us getting this bearish momentum, you can see price has actually created new bearish PDRs. So we are not going to ignore these bearish PDRs, because these bearish PDRs actually will act as our confirmation when this market is ready to give us a bullish momentum, and that means we are not likely to get that deeper retracement. If you're going to get a bullish momentum just from this fair value gap where price is at the moment, what you want to see first, you want to actually see price invert this bearish fair value gap. The moment price inverts this bearish fair value gap, at that point, that is a high probability confirmation that you are likely to see that bullish momentum. Now, so that is on the technical side. If you look at the fundamental side, right now, what is going on in the world, of course, again, Iran and the US, they're back at it. I'm sure by now you have noticed anytime we have escalation between US and Iran and oil prices going crazy and the Strait of Hormuz being closed, the dollar tends to be stronger, because at this point, the dollar acts as a safe haven currency. So I won't be surprised if the market actually will not give us that deeper retracement and we just end up inverting this fair value gap and we see that bullish momentum simply because of the global crisis. So let's look at USDCHF. So USDCHF and dollar index are positively correlated. So which means anytime the dollar is bullish, expect USDCHF to also be bullish. And if you look at actually the structure on the weekly time frame, you can see there's a lot of similarities between the two. Now, of course, you can see here we had that bullish momentum, a retracement, again, the same thing. You can see we got a retracement to a discount of the range. Then finally, the market has given us a new higher high, so we have a break of structure. If you're to get this range, you can see this dealing range. The discount of the range is around this point here, where we also have the monthly order block here. So it's still the same two things. Either we just continue going higher and price is not ready to give us the deeper retracement, and in that case the market is going to use this weekly fair value gap as support, and in that case you're going to extend our dealing range. So that's option A. Or option B, actually the market gives us that deeper retracement before we see that bullish momentum. So I want us to look at the daily time frame, and you can clearly see from this low to this high, the market made a new higher high. So all these can just be considered what? A retracement to a discount of this dealing range. And you can see we have this daily fair value gap here, which has been tagged by price. So if you're not going to get again the deeper retracement to the weekly range, then you can see price has clearly tagged a discount array, which is this fair value gap, and we've had all this bullish momentum. And you'll also see that the market actually inverted this bearish fair value gap. But DXY, we have not yet done that. So if dollar is going to invert that daily fair value gap, the bearish fair value gap, then of course we expect that DXY should do what? Should give us that bullish momentum. So let's look at EURUSD. EURUSD dollar index are negatively correlated. That means if you're bullish on dollar, then EURUSD is bearish. And of course, you can clearly see the price action, even the market structure on the weekly time frame is the opposite. Now we've had what? A lower low on the weekly time frame, break of structure. Now again, it's the same thing, but we're going to use the dollar index as our leading indicator. The moment DXY, dollar index, inverts that bearish fair value gap that we have looked at, then at that point, that is enough confirmation that EURUSD is also ready for the bearish momentum. Because remember, EURUSD, we are bearish, and our draw of liquidity is this sell side liquidity. You can see there's this weekly fair value gap, which got tagged slightly. So I won't be surprised actually if we can still tag it before we see that bearish momentum. And in that case, of course, dollar index will show us it's really bullish. Or if you're going to get a deeper retracement for dollar, then again expect that EURUSD, we are still going to get more retracement before we see the bearish momentum. So let's look at the daily time frame. Again, the same thing. Either we just get price tag, this would be nice if we get a tag and then you get a bearish momentum, or if you're going to get deeper retracement, then for me, I'm looking at this fair value gap here as high probability where the market is going to get to before we get that bearish momentum. So let's look at GBPUSD, and we're going to start with the daily time frame. So GU and EURUSD are positively correlated. We expect a bearish EURUSD, then of course GBPUSD you also expect bearish, and at the same time they're negatively correlated with the dollar. But now if you compare GBPUSD and EURUSD, you'll realize GBPUSD has a lot more strength compared to EURUSD. EURUSD, this retracement we just got to somewhere here. But if you come look at GBPUSD, you can clearly see this retracement is all the way to these highs right here. So even if you're going to get the bearish momentum, then we're going to look at SMT. As of now, we have SMT between EURUSD and GBPUSD, because GBPUSD price has taken out these highs here, Wednesday, 17th July. And if you look at EURUSD, price has not really gotten to these highs here. So let's look at gold. And gold, as long as dollar is still giving us those bullish momentum, for gold we want to see more bearish gold. And of course for gold there's so much more liquidity here that the market could come for. Now if you look at the weekly time frame, is the same thing. We have made a new lower low, we have a break of structure. If you get your Fibonacci tool, you realize 50% of the weekly range is around here, where we have, you can say this is a change instead of delivery, because of course as you're having this high, there's so much liquidity that was swept, and then we have closed below it, consecutive bullish candles. So yeah, we have this change instead of delivery, and we have an order block. So if you're going to get a deeper retracement for dollar, deeper retracement to a weekly range, then expect gold is also going to give us a deeper retracement on this weekly range. So let's look at the daily time frame. If you look at the daily time frame, of course, you can see the market made a new lower low. So this is the dealing range on the daily time frame, and you can clearly see we've had a retracement to actually premium of the range where we have this order block right here. Now, if you're going to get bullish momentum for dollar, price inverts the bearish fair value gap and you see bullish moves, then gold you expect that this daily order block is what will give us the resistance to push price lower, and so gold you'll expect to see a bearish momentum. So let's look at BTCUSD. Again, I'm sure BTCUSD you also see this similarity with dollar, but now on the opposite side. Of course, first of all, BTCUSD, we are bearish. Really, our analysis is bearish. We are looking at these lows here. This 49,000. I'm looking at this low as my higher time frame draw of liquidity for BTCUSD. And so far, if you look at the weekly time frame, you can see the structure is really clear. We had a low, and then the market gave us a retracement, and then we had this lower low. The market gave us a retracement, and now what happened? We have a new lower low. Now, after this new lower low has formed, of course, we can see we have this weekly fair value gap here, and we have a monthly order block here. So are we likely to see? It will be nice actually if we get a deeper retracement for price to tag this weekly fair value gap and also tag the monthly order block before we see that bearish momentum. That will give us a better high probability moves because price will actually have retraced to a premium of this range. So let's look at the daily time frame, and you can clearly see so far this is what we have on the daily time frame. And there's a tiny fair value gap here which has been tagged. So if you're going to get a bullish momentum to this high, and you can see we have relative equal highs. These are beautiful highs that we have up here that I would really love to see actually price go before we see before we start selling BTCUSD. Or another way is you cannot force the market to give you the deeper retracement, although that's what we normally love to see because they give us high probability setups. If you're not going to get that deeper retracement, then you want to see price actually close below here. The moment you see price close below here, forming a bearish order block, then that will give you a high probability sell for BTCUSD. So that is all I prepared for this weekly outlook video. So guys, if you like these videos, please don't forget to give it a thumbs up. If you have not subscribed, kindly hit that subscribe button. I'll see you in the next one.